on to that 18,230 mark.
We're down more than 100 points on the Nifty.
18,074 currently for the Nifty.
Low on the Nifty was about 18,038. So from that level, we have recovered about 40 to 50 odd points. For that, it's 18,030 on the Nifty, a cut of 200 points.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track 6 hours of the day's trading action in 5 headlines. I'm Sonia and these are all the top headlines for the day. Stock markets stumble for the first time in 2023. The Sensex loses over 600 points. The Nifty declines by 1%. Metals and realty stocks lead the fall today. HDFC Bank reports below par credit growth. Yes Bank's growth also lags peers, with both seeing declines in CASA ratios. However, IndusInd Bank bucks the trend, posting its best loan growth in 12 quarters. All 3 stocks close with cuts of over 2%. And relief for Tata Power as the country's power regulator orders the company to share 30% of the mining profits rather than the anticipated 100%, while JBM Auto perks up after CNBC-TV18 reports that it is likely to win a CESL tender worth over 10,000 crores. That's an exclusive. Equitas Small Finance Bank gains after SBI Mutual Fund gets the RBI nod to up its stake, while strong December business boosts Angel One and an order win lifts Railtel. And fresh fears of a slowdown following weak China data and IMF's warning hurts crude. Brent crude declines over 2%. Well, here's the lineup of what we have in store for you. It's a packed show today. In Market Opinion, we'll get you the word from Steve Bryce of Standard Chartered Wealth Management on recession and the Indian markets. We'll also get you corporate opinion on rural demand from Kantar's K. Ramakrishnan and Mahindra Group Sachidanand Shukla. Well, before we get to all of that, here's a quick look at the day's market action. Dalal Street saw an all-round fall and failed to hold on to this week's early gains. The Nifty and the Sensex fell over 1%, with metals and realty leading that slide. Both those indices saw a fall of over 2%. Nigel is here with the day's trading action. Nigel.
Well, global markets itself were jittery overnight on the back of recession fears, and that's what weighed on global stock markets. For the Indian markets, participation was back, which wasn't the best thing because we did see quite a bit of selling pressure all through the trading session. The bigger problem was that the broader markets that outperformed for the last 2 sessions, well, it underperformed in today's trading session, with way more number of stocks declining in comparison to the number of stocks that were advancing. Metal stocks, well, they've given away most of those gains that we saw. Remember, pricing did see a bit of a bounce in the last few sessions. However, the recessionary fears are back, and the problem is, will China slow down yet again? And that's why ferrous and non-ferrous stocks, they did come in for selling. Coal India, there was an additional news print that did come out, and that was that the wage hike has been approved to the tune of around 19%. The street believes that in the near term, things could be under some pressure because the pass-through may not be possible in a pre-election year. Tech stocks, well, they did see some pressure all through the trading session, and they're not out of the woods as yet. Infosys and Wipro, both of them did end in the red. The problem, though, is that the heavyweight stocks, Reliance Industries and the HDFC twins, well, they ended with cuts of more than 1%, and that's what put pressure and contributed to a bulk of the 200-point downtick that we saw on the Nifty itself. The Nifty Bank, that's been the saving grace. The problem is today, it broke the 20 DMA and ended below those levels. So you had IndusInd Bank that was lower, RBL Bank, as well as Canara Bank. All of them did end with cuts of around 1% to around 3% odd. Remember, they've had a big run, but they did come in for some selling today. And IndusInd Bank, they came up with the quarterly numbers, which didn't look that bad, but that stock did see a bit of a knock in today's session. Well, a couple of other quarterly updates as well did come about. Vedanta and Avenue Supermarts, but both those 2 stocks as well did end with cuts. All in all, it was a down day for the markets. The Nifty ended at the low point of the day. Interesting to see whether or not we go and test the December 2022 lows, or in fact, we do see a bit of a bounce from these levels.
All right, it was a weak day for the market. Global markets have been jittery ever since the US reported its fall in PMI for the 3rd straight month, and weakness that we saw both in Tesla as well as in Apple. So global headwinds have dragged down our own markets. In Market Opinion, Steve Bryce, the Chief Investment Officer at Standard Chartered Wealth Management, says the US is heading into a recession, and for India, the assessment is neutral from overweight. So they've downgraded it to a neutral from an overweight earlier. Listen in.
Coincident indicators of the labour market suggest that the Fed still may feel it has some work to do. In terms of is this priced, I think increasingly this has been priced obviously by rates markets. I think we do believe that we will actually they'll over tighten. So we liken it to, going to a buffet and eating a lot of food very early and then getting indigestion later. So we think the Fed will over tighten, and that will lead to the need to cut rates later in the year. But for the focus in the near term, I think it's going to be, we still think we're heading into recession. And therefore, we do think there's still another leg down from an equity market perspective. Within the context of our asset allocation models, we are overweight Asia ex Japan. Within that, we switched from being overweight India at the end of last year to being neutral and switched to being overweight China. Obviously, that's working out pretty well for us at the moment, given the performance of the China markets. We're actually pretty balanced between bonds and equities. So within equities, we have a tilt towards large cap companies, where we see earnings growth resilience and valuations looking more attractive, margin of safety looking good as well. And from a sector perspective, preferring the domestic economy, we see domestic economic resilience in India relative to what's going on elsewhere. So preferring sectors such as financials, industrials, consumer staples in India, as we believe those will be more resilient as we head through 2023.
All right, on to the second headline now. Bank stocks were in focus today as well as they continue to report business updates for the third quarter. HDFC Bank and Yes Bank have reported below par credit growth, with both also seeing declines in CASA ratios. However, IndusInd Bank bucked the trend, posting its best loan growth in 12 quarters. Abhishek is here, standing by with a wrap on these three stocks. Abhishek, over to you.
As you mentioned, HDFC Bank has given its provisional business update. Now, the loan growth has disappointed over there. So, to begin with, deposit momentum was healthy, growing at 19.9% YOY and about 3.5% quarter-on-quarter. Now, across banks, we are seeing that customers are shifting from the low-cost deposit, that is CASA, to bulk deposit or, to higher interest rate term deposit. So, over there, you are seeing a shift. CASA ratio is at 8-quarter low of 44% when compared to 45.5% in the previous quarter. Loan growth on a YOY basis was at 19.5%, which is the weakest that you are seeing in 4 quarters, and about 1.8% on a sequential basis, which is the weakest in last 6 quarters. Now, interestingly, in this loan growth, the corporate book has declined by 1% quarter-on-quarter, which has led to the decline in overall loan growth. X of pool that they share with HDFC Limited, the loan growth is at 19.5% YOY and about 1.86% quarter-on-quarter. The credit to deposit ratio is at 5-quarter low. So we'll need to watch out how the net interest margin expands or contracts for them in Q3 FY23. Yes Bank, it's a mixed bag deposit franchise that's pretty robust. The overall deposit growth is nearly 16% YOY and about 6.8% quarter-on-quarter. The CASA has also held up well, growing at 14.2% YOY and 3% quarter-on-quarter. So declining CASA ratio is just 10 basis points on a sequential basis. Loan growth, that's a weak momentum over there. They have lost market share both YOY and quarter-on-quarter, given the fact that the loan growth is at 11.7% YOY and just over 2% sequentially. Liquidity coverage ratio has improved massively on a sequential basis. Coming on to IndusInd Bank, the YOY loan growth of about 19% is perhaps one of the best that you are seeing in last 12 quarters. Deposit momentum up about 14.3% YOY and nearly about 3% sequentially. The CASA ratio is at 7-quarter low. We are seeing this transition happening across banks. So it is at 42% when compared to 42.4% in the previous quarter. Calculation shows that, the absolute value of CASA might have grown lower than the overall deposit momentum. Retail deposit, however, was pretty strong, growing at more than 6% quarter-on-quarter. Advances growth 19% YOY and more than 4.5% sequentially. Credit to deposit ratio has expanded both YOY and quarter-on-quarter. So net interest margin can expand for them YOY and quarter-on-quarter in a rising interest rate scenario. Back to you.
All right, Abhishek, thanks a lot for that. Let's move on to the third headline today. Tata Power was in focus after the CERC ordered the company to share 30% of mining profits rather than the anticipated 100%. The country's power regulator ruled that Indian power plants that rely on imported coal should be fully compensated for supplying electricity demand under forced circumstances. Remember, the order pertains to the period from May to December of 2022. Vivek is standing by with more on the stock. Vivek, over to you.
That's right. So some relief coming in for Tata Power. In fact, quite a bit of clarity coming in as far as Tata Power's profit sharing of coal mining profits is concerned. So the CERC committee yesterday in a ruling has gone ahead and ruled, and they have said that the company will now have to share 30% of mining profits from the Mundra PPA, as you mentioned. Now remember, Tata Power is supplying power under emergency measures under this Mundra PPA. Now this particular order pertains to the period from May to December of 2022 and does not pertain to the earlier request of Tata Power to go ahead and increase prices as far as its PPA with various states are concerned, where it supplies power from the Mundra plant. So that's an important clarification. Now, the other important thing to keep an eye out for is the company is also going to share profits through the sales at power exchanges as well. So DAM Capital has written a note on this particular development. They are saying that the sharing of mining profits earlier, which was being calculated 100% to 30%, is actually a material positive as far as the company is concerned. The company was earlier accounting as per rate set by the committee at 100% sharing of the mining profits. So this 30% is something that they are seeing as a positive. They are saying they are expecting anywhere between 500 to 800 crore of additional profit that Tata Power would now be able to recognize. Tata Power also responded to our queries. They have welcomed this particular decision and they believe it is a positive step as far as their own operations are concerned.
All right, Vivek, stay with us. There's a CNBC-TV18 exclusive as well. You understand that JBM Auto is likely to win CESL's tender worth over 10,000 crores. The sources say that the company was the lowest bidder for 5 out of the 6 states included in the tender. The stock closed with a gain of 3%. Vivek, what are you picking up?
Well, absolutely right. So this was one particular tender that was being eagerly awaited by all of the companies that are interested in the EV space, the EV buses space. So now what's actually happened is that CESL, which is the Convergence Energy Services Limited, has actually gone ahead and concluded the tender, as you rightly said, for over 6,400 buses, and this is for 6 Indian states. Now, this is the first tender under the National Electric Bus Program, and the total value of this particular tender is quite significant. It is over 30,000 crore rupees. Now, what we understand from our sources is that JBM Auto, which was an active participant as far as this particular tender is concerned, is likely to get an order or is the L1 or lowest bidder as far as 2,500 buses is concerned, and this would make JBM Auto the highest in terms of the number of buses that it would be getting in. So it is 6 states, Haryana, Gujarat, Telangana, Kerala and Arunachal Pradesh, where JBM Auto is likely to get these order buses from CESL. The estimated value of the contract would work out to a little over 10,000 crore rupees. So it will be a significant development as far as JBM Auto is concerned. We reached out to the management of JBM Auto. They are yet to respond to our queries.
Okay, thanks a lot, Vivek, for that. Well, the new year brought in a whole set of new expectations and the market is no different. So what are brokerages expecting from various sectors in 2023? Let's begin with banking. CLSA expects 2023 to be a strong year for the sector. Abhishek is here with all the details. Abhishek, over to you.
Well, Sonia, to begin with, CLSA says that, 2023 could also be a strong year for the banking sector, especially the H1 CY23, that is the first half of the next this calendar year. So margin would only normalize from H1 CY23, which we have also highlighted that the net interest margin could peak in Q4 FY23. So they expect large cap financials to have a lot of OPEX flexibility in next 12 to 18 months. Remember that, we have been highlighting that large banks had made OPEX over the last 4 to 6 quarters, which would pay reward going ahead to them. So overall, they expect peak ROEs to sustain in FY24. Axis Bank is the preferred top pick, followed by ICICI Bank and SBI. They have upgraded IndusInd Bank to buy from Outperform, raised the target price to 1,500 per share. They have downgraded Bank of Baroda's rating to buy from buy to Outperform. However, target price remains at 210 per share. Back to you.
All right, thanks a lot, Abhishek, for that. From banks to IT, JP Morgan has written an interesting note on what they expect from the IT sector going forward. Rima is joining in to tell us more. Rima, over to you.
Thanks so much for that. So JP Morgan has titled its report The Great Reset. They're saying that growth rates will slow down from mid-teens to 6 to 8% in calendar year 2023 and calendar year 2024. And this will be triggered by demand destruction as evidenced by higher furloughs, flat budgets this year, inflation, very few large deals and pricing pressure. In fact, what JP Morgan has picked up is that Q3 furloughs may extend itself into Q4 as well. They're also making a point that the long-term growth rate doesn't seem to have any big upside triggers due to lack of disruptive new tech drivers beyond digital and cloud adoption cycles. So they're saying growth recovery, calendar year 25 onwards is also likely to be modest. And if growth is going to be modest, then recovery of margins is going to be more challenging because you need operating leverage for margins to pick up. So they're saying that while Q3 growth rates will be blamed on furloughs, a weak Q4 and a weak guidance given by companies during the April to May period is going to result in a PED rating. Valuations today are still much higher than the pre-COVID average levels, as the table on your, on the screen will show you. So in the case of TCS, valuations today are 26 times. Pre-COVID, it was 21 times. For Infosys, the pre-COVID valuation multiple was 17 times, and it's still trading at 21 times. So they're saying that there is a case for valuations to correct back to pre-COVID average levels, which is why they have an underweight rating on most of the large cap IT names, barring an Infosys as well as a Tech Mahindra.
All right, Reema, thanks a lot for that. We'll slip into a quick break, but do stay tuned and we'll be back in just moments from now with all the other top headlines of the day.